Well, yes, the facts are in again, and they're showing that the rich are getting richer. And if you're a regular listener to my podcast, you know we've said that on many occasions. But today's show is very different because today I'm having a chat with Michelle Levine, CEO of Roy Morgan, who happened to be Australia's longest established research company, and they've come out with an Australian wealth report. This is very different to all the other reports, and we're going to dig in and explain to you what's really been going on over the last 10, 15 years with some interesting findings. We're going to talk a bit about why the rich are getting richer. Yeah, you probably know a little bit about that already, but the fact that the average Australian hasn't moved forward with their wealth over the last decade or so. We're going to explain a bit more about men and women and how their wealth has changed. But this is a facts-based show rather than more the mindset sessions we have with Tom Corley, or I discuss about the rich getting richer as well. So you're going to understand exactly what is happening, and hopefully that'll help put you in the right position to become wealthier as well. Then in my mindset message, I'm going to explain to you why you don't want to cover the world in leather. What am I on about? You better listen and find out. So welcome to today's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the 5th time he's won a similar award in the last 7 years.
We keep hearing the rich are getting richer in Australia. And while there's no shortage of attempts to measure the true state of wealth, up till now, there hasn't been anyone able to provide a full picture of the net wealth held by individual Australians. Well, that's until recently, till the Roy Morgan Wealth Report of 2019. Now, if you're like me, you're curious to find out what's happening to the wealth of others, the average Australian, and you'd want to know where you fit in. And if the rich are really getting richer, you're probably wanting to know, how much richer are they? Are they getting richer than you? What's the difference between men and women? Well, to answer these questions, I'm going to have a chat with Michelle Levine, CEO of Roy Morgan, who's Australia's best known and longest established research company. Welcome, Michelle.
Good morning.
Now, Michelle, you've just released the Roy Morgan Wealth Report 2019, and I've had a glimpse at just little bits of it. Big lot of detail. What prompted Roy Morgan to undertake such a detailed level of research?
Well, I can tell you there were times when I wondered that myself. But the truth of the matter is we at Roy Morgan think that it matters to get these things right. We think that facts matter and the truth matters. And we're in a really fortunate position that we're out talking to thousands of people every year, 50,000 people, and we ask those people all about their attitudes to society and elements of their wealth. So we ask them all about the money that they have in banks, in their home, in savings, in superannuation, and their debts. So we're in a position to actually put all of that information together to provide a really holistic perspective of wealth. And when I looked at what was available already, there are plenty of people talking about wealth and debt. But from my experience, most of them are actually using one or two figures that almost serve their purpose. So sometimes it's useful to say the rich are getting richer, let's look at the value of properties, or let's look at stock market portfolios. Or other people will be saying people are getting poorer, it's really hard. So what is the truth of the matter? And that's where I think Roy Morgan comes in.
Well, that's what I was impressed with. So you didn't have a particular agenda in mind when you started off, is that right?
Well, our agenda, I guess, across the board is to get to the truth of the matter. But yes, you're right. In our surveys, we're actually looking at all aspects of Australian life and all of the things that matter to Australians. And so we'll be asking people about soup, we'll be asking people about cars, we'll be asking people about mental health. Anything and everything that's important to people. So in that sense, it's context free, and hopefully there's no bias in our questioning or in the results that we draw. There's no reason for us to be biased. We're just looking to understand society.
Well, that's what I like about it, and I'm sure that's what your corporate clients and government are going to get out of your report, the unbiased advice. So can I ask, let's start with the elephant in the room. Are the rich really getting richer?
Well, there's no question the rich are getting richer. The top 10% of Australians have increased their wealth since about 2007, just before the global financial crisis, by 60%. But the critical thing is, on average, Australians are all getting richer. So it's happening in a broad sense.
Okay. Now, the rich are getting richer all over the world. We keep getting these reports that the top 10% hold almost half the wealth. How do we compare in Australia?
Look, we're very much like those sorts of, I think that's probably a Western figure. So in Australia, the top 10% of people hold 47% of the wealth. And that's pretty much the same as you would find around the world. The bottom 50%, and this is the critical thing, the bottom 50% hold 3.6% of the wealth. So
That's
it's
a
a
vast
very,
difference, isn't it?
it's extraordinary. It's a very, very skewed situation. And perhaps that's not surprising, but when you see the numbers, I have to say, even when I looked at those numbers, I thought, wow, this is really stark.
Sure. So you were comparing things since the GFC, and I guess that was a good benchmark to start with. What's happened to the wealth of the average Australian then? We know the rich have gotten richer, but what's happened to the mum and dad who lives in Australia?
Well, look, let me just say, we measured this before the GFC because the GFC is sort of talked about as if everything went to rack and ruin in the GFC, and we wanted to actually see if that was the case. And the data shows that while Australians' wealth wobbled a little bit, the GFC really didn't hit us in Australia anything like it hit other countries like in America. So emotionally, we went wobbly. Our consumer confidence kind of troughed, and then we were very nervous. But in fact, in terms of our wealth, it was not a really dramatic issue. But since just before the GFC, as a nation, our wealth has almost doubled. So if we added up all of the wealth and removed our debt, so we create a net wealth figure, just before the GFC, Australians held $4.5 trillion. Now it's $8.6 trillion. So 90% more wealth. And
Now, a lot of that's in their homes, Michelle. Would that be right? And in their superannuation funds?
Absolutely. Absolutely. And that's a critical thing. And like most major research projects like this one is, it does raise a whole bunch of questions, and you just want to get in there and find out what else is happening. But you raise an important point. In Australia, the vast majority of our wealth is in property. So of that 8.6 trillion that I mentioned, about 6 trillion is in property. 5 of that is our own homes. And then about 2.4 trillion is in superannuation. So they are definitely the big chunks.
And some people would say there's a risk when it's so concentrated, especially since a large level of debt that has been accumulated with those assets. But you're talking about net wealth, aren't you? What's actually left after you take away the debt?
Absolutely. So one of the other things that's interesting is we do hear a lot about wealth, about debt, and there's people sort of very, very, very concerned about debt. The truth of the matter is that essentially our debt has been increasing, there's no question, but our wealth is increasing at a faster rate. So our net wealth is increasing. And, the numbers are pretty clear. If we've got $8.6 trillion in net wealth, our debts are about 1.2 trillion. So the debt is not really extraordinary.
Well, that's good news. And again, there's always going to be the negative Nellies and the naysayers scaring us, saying that we've got a property bubble that's going to burst or a debt bubble that's going to engulf us. But we started to talk about the rich getting richer. What happened to the average mum and dad? How did their wealth increase in real terms after inflation over the last decade or so?
Look, these are the really tricky areas. So if we look at a kind of a per capita wealth, it's up. If we look at a median, now a median is a number that you use where 50% of the population is above that number and 50% below. The median, after adjusting for CPI, is actually down a little bit. It's down about 2%.
That confirms that people in general are saying, I actually don't feel richer. Petrol costs more, utilities cost more, energy costs more, and my wages aren't going up.
Yes, it's a very interesting conundrum, isn't it? When we look at these numbers, when we look at the data, we have to also compare it with the kind of lived experience. And that's what you're talking about, that lived experience. Now, you're right, there's a lot of prices have gone up. If you look at the data on income and prices, though, which is not what this report's about, I looked at that a little while ago, and it was interesting because essentially, while we always feel that prices are going up, in fact, our incomes have increased on average a lot more than prices have gone up. And things like prices at the supermarket, incredibly, have been flat or even down. So it's really important to look at the detailed facts. But in preparation for talking to you this morning, because I thought you'd be asking me these questions about average people, I looked again at the overall, all of these deciles, which are 10 percentage points. And what you find is the top 30% have increased by around 60%, bit more than that, 60 to 65. The very bottom people, the bottom 30%, have gone up by similar amounts, but of course they're coming off a kind of totally negligible base. But it's the ones in the middle who are, the 40% in the middle that haven't seen that level of increase. They've all gone up, but they're kind of around a 20% increase. And then you apply a CPI adjustment, and no wonder they're feeling less wealthy.
And is that because, if we said a moment ago, a lot of the wealth is in their homes, the rich have got more expensive homes and proportionately are going up more, the rich can put more into their superannuation? Have you dug down to that level?
Yes, we have. And the funny thing is, the wealthy are wealthy because they have lots of sources of wealth. They have property, they have superannuation, they have investments, a range of things. The people in the middle and the poor end are there for all sorts of different reasons. Oh, and the other point I must make is the top end, the wealthier, are typically older. And there's a clue. A lot of the issue is that we've lived, if you're a baby boomer, how lucky? Because basically we've lived through a time of economic growth, and by just kind of getting into any investment and sitting there, you did well. So older people are typically well overrepresented in that top end. Not all old people are rich, but most of the rich people are older. But at the bottom end of the wealth profile, if you like, you've got people there for a whole range of reasons and very different people. So you'll find students in there. So students who are still in that transition stage, they don't have any wealth. They haven't even started. And that's probably not anything to worry about. You've got people, though, that are there because they might be older. They haven't actually managed to get into the property market. They don't have super. Think about, for instance, women who haven't worked, who've then separated from their husband, or the husband has died and they haven't managed to get into that wealth building situation, and they are in real strife. Or you've had people who are, for instance, their family's broken up, or they're unemployed. Life has happened to them and put them into this really difficult situation. So in order to work out how you end up rich and how you end up poor, it's just not simple.
No, you make some really, really good points there. And wealth is an accumulation of your efforts and a level of delayed gratification over a period of time. So it makes sense that the younger people haven't had a chance to catch up yet. But you also started to talk about men and women. Did your research show any difference? How do women compare with men with regard to building their wealth?
So, women these days are still trailing men. There's no question about that. So, the average man has about $445,000 in net wealth. The average woman has about $393,000. That's 88% of the male average. So, women are still behind, but not by a lot. Now, in 2007, women had 80% of the male average wealth. So there's been a catch-up happening. And put another way, looking at those numbers just from a different perspective, men have gone up by 50%, women have gone up by 66%. So the simple story, women are catching up, but they're not quite there yet.
Well, that's good news. Now, clearly our wealth, as we said a couple of times, is underpinned by residential property in Australia and money in superannuation funds. How does it compare with overseas, where people tend not to have a forced form of superannuation, or a lot of people don't own their own home? It's just a different way of living in Europe or the United States.
Yes, look, our data is not solid for those international places, but from everything I know, Australia is pretty unique in having our wealth so strongly invested in property, and our superannuation system seems to have really kicked on and looks like continuing to go strongly. So I think we're pretty unique in having our money in these places. Of course, superannuation money is invested in the stock market and other places as well. So it really, super's just another vehicle.
Yeah, it's another form of forced savings. Now, one of the things that I follow your research regularly, and we regularly post on Property Update, is the consumer sentiment indexes that you come up with. And that's been bouncing around a lot lately. What's on the minds of consumers? What are they concerned about?
I think everybody who looks at the economy is talking about, as you are, ticking time bombs. There is a sense of foreboding that seems to be across the Australian population. So we're moving from, and we've just come out of an election period where there are a lot of issues thrown at people. And so I think people are quite nervous, and they're looking at themselves, they're looking at the economy and changing from week to week. It's not like I'm a super confident person. I'm a confident person week in, week out. I think we are actually flip-flopping a bit in how we see the world.
Now, Michelle, there's a lot of talk about a debt crisis in Australia. There's talk about mounting household debt, and potentially, we've already used the word before, it's a ticking time bomb that's going to explode. How do you feel about this theory?
I think there's lots of ticking time bombs. I personally think the most important ticking time bomb is the fact that we are now in a different economic situation than we've been in the last 20 years or 10 years. So I talked earlier about time, about how older people had had time to accumulate wealth. Well, that all assumes a growing economy and interest rates at reasonable levels. We're now looking into a fairly low growth economy or an even no growth economy. So the investment strategies of people, whether they even think about them as investment strategies, will respond to that. So the value of people's homes probably won't keep increasing. I don't think they're going to be decimated to 20% of their value or something, as happened in America, where people found that the value of their mortgage was greater than the value of their home, so they locked up the house and walked away. I don't see that in Australia, but I do see a real change coming in the way that people look at homes rather than financial investments. They might see them more just as a place to live. And I think we'll see some real changes happening in the whole investment area.
Well, we've got a new decade coming, and it will be different. Lower wages growth, lower inflation, lower capital growth environment. So I guess you're right. We can't just count on the economy and inflation pulling us up, can we?
No, and I think what's really critical is that we probably to articulate clearly that the reason things have gone well is because the economy has been doing well and there's been growth. Because I think we seem to forget that. We seem to assume that's the lie of the land and we just have to play in it. But the lie of the land has changed.
Well, growth's been related to a number of factors. We're having some challenges, but I think a great way to finish this, Michelle, is to remember that we're living in the best time in history, in the best place in the world, and we shouldn't be gloomy, even though there are headwinds ahead. we're still living in fantastic time, and we're lucky to be in Australia, aren't we?
There's no question. Who'd want to be anywhere else?
Yes. Well, there's long queues of people coming in here. When my parents came as migrants in the 50s, they used to pay people to come to Australia. It's very, very different today, isn't it?
Yeah, and remember that the growth of Australia has been largely dependent on immigration. Population growth is driving so much of our economy.
Sure. And that's, I think, one of the reasons it is going to continue on, and I'm feeling comfortable about it, because while there are other challenges, I think both sides of government have recognised that we do have to have a growing population to keep our economy going, to make up for the baby boomers who are going to retire over the next decade or so. And that's one of the many factors that is going to underpin our growth, and still we're the envy of most other Western nations, aren't we?
Yes, absolutely. And can I just say we should be the envy of them, because I don't think in any other country is there such good data that comes from people. If our governments and our policymakers in every area really dive into this data, they will be able to understand the pain in the different parts of society. We've talked mostly today about wealth, but in fact the pockets of pain at the lower end and people really struggling need to be understood, because that is a real risk of fragility for this nation. We don't want to have a completely divided nation where some are completely left behind, not understood. That's politically, economically, humanly a really bad place to be, and totally un-Australian in my view.
I fully agree. So you should be very proud of this very detailed wealth report. I remember Roy Morgan. I'm old enough to remember when it was called the Gallup poll, and once a year I heard the company's name talk about who's going to win the election or not. Now you provide so much regular, great data and so much to help us understand what's going on in the homes of average Australians. So once again, thank you very much, Michelle Levine, CEO of Roy Morgan, Australia's best known and longest established research company.
Thank you. My pleasure.
Well, that was another take on why the rich are getting richer, based on facts, based on research, based on in-house consultations with clients, which is the way Roy Morgan Research do it. And one of the points that came out, and it comes out again and again, is that if you want to become amongst the wealthy people in Australia, if you want to get ahead of the average person, you've got to own assets, and residential real estate is the way to go. If that's what the others have done to get rich, why shouldn't you? But the world is changing, and we're in a slightly different environment moving into a new decade. We're going to not have as strong capital growth. We're in a lower wages and growth environment, a lower inflationary environment. And as Michelle Levine said, it's not going to be assured that just owning property is going to work. So you've got to own the right sort of properties. And we talk about that in other shows, and I've explained to you a bit about that in previous podcasts. But if you want to move ahead, if you want to separate yourself from the pack, it's a little bit hard to do it on your own. So my recommendation to you is have a chat with my team of property strategists and buyers agents at Metropole to help level the playing field for you, to help you get what we call investment grade properties, because only selected sectors of our property markets are likely to outperform moving forward. At Metropole, we don't sell property, so you don't have to worry about that. We help our clients grow, protect and pass on their wealth through a range of services. We give strategic property advice. Why not allow us to build a strategic property plan for you and for your family? Bringing the future into the present is what we do by helping you plan so you can do something about it now. Sure, we have a buyer's agency. It's Australia's most trusted buyer's agency. Interestingly, our company has recently won an award as Australia's leading property consultants for 2019. And this was an internationally won award, so we're very proud of that. But our buyer's agency has been involved in more than $3 billion worth of transactions, helping clients buy properties that outperform the averages. But we've got on-the-ground teams in Sydney, Melbourne and Brisbane to bring you years of experience and perspective, something money can't buy. But you can hire it. Let us help you buy your next home or your investment-grade property. And we have a wealth advisory and financial planning arm as well. So why not go to metropole.com.au and find out more about our services? And we'd love to be part of your wealth creation journey.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
Today's mindset message is a edited version of a TED Talk by Pema Chodron, and she called it Lousy World. Her powerful talk draws the distinction between living in this world constantly annoyed and disappointed over things you can't change, as opposed to adopting a useful belief and only focusing on things that you can control. And so in her talk she said, this lousy world, those lousy people, that lousy government, the lousy weather, this lousy everything, lousy blah, blah, blah. It's too hot in here, too cold. They're too fat next to me, or they're wearing perfume and I'm allergic to perfume. It's like being barefoot and walking across blazing hot sand or across glass or in a field of thorns, she said. And your feet are bare and you say, it's just too hard, it's really hurting, it's terrible, it's too sharp, it's too painful, it's too hot. But then Chodron said, you suddenly get a great idea. You suddenly cover everywhere you're going to go with leather. And then it won't hurt your feet anymore. Spreading leather everywhere you go can cover the pain. It's like saying, I'm going to get rid of her. I'm going to get rid of him. I'm going to get the temperature right. I'm going to ban perfume in this world. And then there'll be nothing that bothers me at all. I'm going to get rid of everything that bothers me anywhere in the world, including mosquitoes. And then I'm going to be very, very happy. I'm going to be a content person. And you're probably giggling at that too. But that's what we all do. That's how we tend to approach things. We think if we can just get rid of them or cover them up with leather, our pain's going to go away. Well, sure, because then it won't be cutting our feet anymore. It's logical, isn't it? But it doesn't really make sense. As Indian Buddhist monk Chandravara said, you can simply wrap the leather around your feet. In other words, if you put on shoes when you walk across the boiling sand, the cut glass and the thorns won't bother you. So the lesson is, if you work on your mind instead of trying to change everything on the outside, that's how your temper will cool down. Remember, anything you can't control is really teaching you how to let go. So now it's up to you. Rather than covering the world in leather, cover your feet in leather. And enjoy this great world. Well, as we come close to the end of another show, I'd like to say thank you for joining me. Twice a week, I bring you new episodes of the Michael Yardney podcast to help you become more financially independent, more financially fluent. And if you got some benefit from this show, help me on my quest to help more people become financially fluent by sharing the episode with somebody. Tell somebody about it, or there's a share button at the bottom of every podcast app. Just let people know. And if you'd like to tell the world, why not leave a review on iTunes or Stitcher or wherever you listen? Because I love those. When I read them out, when I read yours out, and you email me, michael@metropole.com.au, I'll gift you one of my books. You just got to tell me which one you'd like. As I'm going to do for Matt Napier, who left a review a short while ago saying, amazing for new investors. Michael's podcasts are informative, greatly breaking down important topics so that they're easy to understand when new to property investing. Also provides mental insights. Really enjoy the stories about feeding the wolves. Love the podcast each week. Well, thank you so much, Matt. And thanks for taking the time to leave a review on iTunes, a 5-star review, which is great. Now, twice a week, I'm going to be continuing giving you new information on the Michael Yardney podcast. We're going to do it right throughout the Christmas break as well, even though I'm taking a holiday, a long one. This year, the wonders of technology are going to allow us to keep bringing you these shows. In between, you can keep in contact with me on social media, Facebook, Twitter, Instagram. I'm having fun on Instagram at the moment. Just follow me at Michael Yardney. Please contact me, follow me. Let me find out about you. You'll find out about my life. As I said, I'm going on a long vacation. We're going on a 6-week cruise, so you're probably going to find out a bit about what's going on in my personal life. Why not? And in between, you can find out about wealth, success, money, property, tax, finance at propertyupdate.com.au. We've had over 1.2 million unique readers to my Property Update daily newsletter this year. So proud of how the audience has grown, and we love giving you lots of great independent information. I'll be back real soon. Twice a week you get these Michael Yardney podcasts. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?